The Bitcoin price has pumped nicely in the last couple of days, coming back to $60,000, and now we're just sitting a little bit under it in this weekend. And the big question is, what is going to happen next? Will we finally break this bull flag to the upside? Will we rally to over $100,000 per Bitcoin? What is going to happen next? Which are the catalysts? And is there a chance also to just roll over and drop into a deep bear market? Or is this next leg up, this bull run, guaranteed? Let's talk about this, and let's talk also about between TA and on-chain metrics and news. So what is really relevant? What is really driving the price? And what is just hot air? What is just steam? What is just something that we can ignore and that doesn't really influence the price? Let's talk about all of this in this market update. So hey everyone, it's the Patient Hodler coming at you with another update video for you guys. And if you like these small market update videos, then please smash up the like button right now to motivate me to get out more of these videos. And let's jump right into the chart. So as we can see here, Bitcoin has come up, bounced on the lower end of this bull flag, and is now sitting in the middle of this move that we are expecting is going all the way to the top of this bull flag. And right now, this is already more than 10% move. If we take the lowest point that has actually wicked out here, it is 13, almost 14% up as a move, and is going nicely for the moment. But obviously, this is the very immediate short term, and we can see how we have been bouncing basically since we had our first touch point here in this pattern in March. We are basically going up and down in this pattern, more or less in this pattern, obviously faking out to the downside. So market makers, whales, they're really playing here, everyone that is trading, wrecking the bulls and also the bears at either side. But right now, at some point, this pattern will flip. It will break out to one or the other side and actually tell us where things are going. And in my opinion, the likelihood of us breaking out to the upside right now is higher than breaking to the downside, considering the things that are about to happen in the near future for the Bitcoin price. Let's also look at the broader pattern here for Bitcoin. So basically what we have in front of us is a big cup and handle pattern. So you see here the mega cup and then also a mega handle, obviously, to this pattern. Otherwise it wouldn't be a nice cup of coffee, right? And we see that we are just in this. So basically this bull flag at the same time is also the handle to this mega pattern. And if you would want to see it as even something that could turn into an inverse head and shoulders, like of massive magnitude. And in my opinion, it all comes down to global liquidity. So as we can see here, the yellow line is the development of global liquidity, of the global liquidity index. And we can see that whenever global liquidity turned around and rose, that had a massive impact on the Bitcoin price as well. I think the best point to see this is here, as the pandemic hit and we had this massive crash also into like a minor reduction of global liquidity, and then the massive money printing, which basically increased global liquidity in a massive scale. We also had our major rally a little bit after the rise of global liquidity. And if you look here, actually, here global liquidity was already rising, but it took about 220 days until the Bitcoin price reacted to this increase in global liquidity. And then global liquidity was falling off or going sideways, didn't increase anymore, and Bitcoin also reacted immediately in this 200 day period to it with a massive bear market. And liquidity has been dropping off ever since, as you can see here. And whenever global liquidity had a little bit of a comeback, also the Bitcoin price reacted. So it found a bottom here, and shortly after, only, what is this, since we find our bottom here, shortly after, about 2 months after, Bitcoin also found its bottom. But this wasn't the end of the drop of global liquidity, although Bitcoin was already in the rise, driven by different macro factors, just as the introduction of spot ETF, the Fed not hiking rates anymore, and so on. We see that still global liquidity was basically on a downtrend here, and whenever global liquidity turned around and decreased again worldwide, we can also see that this had a sideways to downwards impact on Bitcoin. And now we had another bump in global liquidity, and actually coming down until June. And we have our sideways to downwards action again here for Bitcoin. And keep in mind, it seems to have about a 2 months at least delay. So it is a leading indicator for Bitcoin. And now global liquidity is turning around once again. And this effect has not really taken place yet in our overall Bitcoin view. So now let's combine this with the macro factors. So what we see is that the central banks in the world are taking measures to counter negative developments in the economies. So the European Union already did 2 rate cuts of 25 basis points, and Canada also has already cut down by 75 basis points. And the UK had their first rate cut, China had their first rate cut, and Denmark had their first rate cut. But this is not enough, because also the Fed will cut interest rates in the next couple of days. And if we are looking at the Fed watch tool, we can see first of all in the countdown that the Fed is going to cut in 4 days and 3 hours from making this video. But also we can see that the chances that the market sees for 25 or 50 basis point rate cuts are 50-50 now. So it's basically a coin flip, but it's 100% chance that there will be a rate cut, meaning that it will then lead subsequently with a delay for everyone to lower interest rates on loans, also for the economy, for private people. So that gives already a little bit of room for people to breathe, because in a couple of months, people will be able to refinance their high interest debt with a little bit cheaper debt. So people will already be shifting around their loans and be refinancing, and therefore having a little bit more room to operate. This will take a while, but this will take effect in the market. At the same time, countries like China are already pulling out the financial bazooka to treat the problems in the economy and to delay the collapse in the own economy. And for the US and for the EU and many other countries, that financial bazooka in terms of really printing money and pressing it into the market has not really yet been locked and loaded and ready to fire. But for China, for example, it is already adding trillions to the global liquidity. And you can see here, global liquidity is rising to an all-time high. So as we've seen before, global liquidity is really the relevant factor, how much money is being pumped into the different risk-on assets, and Bitcoin and altcoins and NFTs, they are the real risk-on assets, the most degenerate place that you can find everywhere. So global liquidity going to an all-time high means that at some point this money will reach through the different funnels also these assets, and it will not be immediately, because if you can imagine, the government prints money, they will not go and buy an NFT with it. They will go and basically service the interest rate, meaning they have to give it to the people that have bonds and so on, right? Pay back some debt and then create new debt on the other side. But this money will hit the market over several different ways until it finally reaches the pocket of someone who is ready to buy Bitcoin with it. And once Bitcoin goes up, people will take profit, and basically this money from that person that bought Bitcoin hits the pocket of someone else that already had Bitcoin, is ready to sell and or convert Bitcoin into an altcoin, which makes then the altcoin go up, where other people are taking profits and then take this money and pump it into NFTs, which will make NFTs go up. And the lower the market cap is, the same money hitting this market cap, the higher, the more extreme these prices go. So what we can observe here now is that basically these global liquidity cycles They are just moving coincidentally in an almost 4-year cycle. And every time the global liquidity pumps and basically the cycle is coming back, that also is when Bitcoin and all risk on assets will have their time and they are starting to fly to all-time highs. Now you could say, oh, patient hodler, but this cycle is completely underperforming since the halving. The reason for this is many. The first reason is we have already pumped before the halving, which is not displayed here, but actually in this previous cycle, in the end of the cycle, because this line ends with the halving, we have pumped more than usual into the halving because of the news of the Bitcoin ETFs and the extreme buying of the Bitcoin ETFs. So now we are basically a little bit readjusting. And as you can see here, also in other cycles, we haven't really taken off until then, but we're basically realigning now what we have pumped too much before. That is one reason. The other reason is that the halving is not the reason why we're pumping. Global liquidity is, as I explained before. So if global liquidity takes more time to actually come back and go to new all-time highs, then also this will be right translated. So people claimed here that we have a left translated cycle, but this was only very short-lived. Right now, it is basically that these financial bazookas, as I mentioned before, they are not fired yet. They did not hit the market. So everything is waiting on a couple of catalysts that are coming. The first one is that everyone in the world, all the financial banks in the world, have to lower their interest rates direction zero, and maybe even hitting zero and holding at zero, and then we will start pumping. And you see it here in the different cycles we pumped at different times after the halving. And so if you would really say, oh, the halving is the reason, then all the time we should pump at the same time after the halving, because then it's halving plus X days to react and we pump. But it's not. I think the reward halving is something that trickles in over the course of a cycle, just when global liquidity drives how much money people basically have to ape into crypto, and then this money hits the increased scarcity that drives the whole thing a little bit more explosive. But the halving is not the reason why you're pumping. It's actually when is global liquidity hitting the pockets of the average person, like this extra printing. And that doesn't mean that because the government printed that people have more money in general, but they have more incentive to put this money that is left over into crypto, because they feel the debasement of the currency in other areas of their life. So they see the prices going up in the crypto market, they see the outperformance of these assets, and they want a piece of the pie. So they are entering once this is all happening, right? Which usually leads to people buying the top, because they cannot afford anymore the things that they could afford before, or they want more out of it. So they're looking for assets that are doing that, and the internet is full of hints at that this would be the outperforming asset, which it is, but it already has outperformed. So this is when people will make the first step into crypto. They get wrecked. Half of them will not come back or will come back later. And the other half, or even less, stays in the cycle, makes all the learning curve through the bear market, starts buying and becomes a real crypto hodler, investor, whatever, right? And then benefits 4 years later. Unfortunately, that is the nature, but on the other hand, also this unique opportunity to learn in a cycle. So I think that is really what it all comes down to. But if you are looking for where the cycle is from the bottom of each cycle, which aligns more to global liquidity, because if you look at the bottom, it's not halving dependent. If you look at the bottom, it's global liquidity bottom dependent. So if you will make an overlay of the different cycles here with this comparison, then you can actually see that we are right on track. We are actually in between both cycles, with our recent pump resembling our last cycle, and with our trajectory resembling both cycles. So we're just in the middle, and if this would hold any truth like it did since the bottom of this bear market and all the other cycles, then what is coming next is our final phase, our pump together with global liquidity hitting an all-time high. Gold already hitting an all-time high. You can look it up for yourself, the gold chart. Gold is already at an all-time high. So global liquidity is influencing already the gold price together with this crisis, recessive environment. Now we're going to have these rate cuts that could lead to a flash crash depending on if something in the economy breaks or not. We had seen that before already. But overall, just realize that we're end of September. We have these two catalysts, rate cuts and US elections in front of us, plus this underlying catalyst, global liquidity, going on a crazy, crazy ride. And then I think it is time for us to go into a very, very green quarter in the end of this year. I could be wrong, of course, as everyone on this internet. And if you think I am, then let me know in the comments below what you think. But I think so far we are right on track, and you can see whether it takes a little bit more time, like the 2015 to 18 cycle, or whether it goes a little bit quicker. I think that depends on how hard and quick and swift this financial bazooka will be. And I think it will be more like this green line, the 2015-18 cycle, because I personally expect the Fed to just cut a 25 basis point cut, and that quantitative easing is coming in slower than as a reaction to the pandemic. But that depends on if something breaks until in the next couple of days in this economy or not. And then also, if we're looking on chain, we see that this hash rate drawdown, basically minor capitulation, that has reached now levels comparable to when Bitcoin was at 16,000 in our bear market. So really this shows that very likely at some point we are in the end of this basically consolidation downwards period. And this is what I meant by on-chain comparison and then TA and then what's happening in the news. And finally, if you're a believer in the whole thing with Bitcoin being established as a big asset, and I think there's really no reason why you shouldn't be, because now that Bitcoin ETFs are out there everywhere in the world for everyone that is in investment to invest in, and you see that this adoption is rising, you should technically assume that at least Bitcoin is going to gain some share in this market, going from 1 to 2 trillion maybe, going maybe to 5 trillion and so on. So if you believe that, then you can say, okay, maybe altcoins are too degenerate, but Bitcoin, that is maybe worth allocating a bit of your financial assets, right? And the more you're looking at this, for example, if you see that gold is somewhere at a $17 trillion total market cap. I think it is. It was 10, but now the Bitcoin price has been rising. So actually, the market cap has been rising quite a bit, leading into this new all-time high. And then also, if you see that people have like 18 trillion in art, I mean, if you are not bullish on NFT after seeing this number, just saying like digital art, officially licensed NFTs and so on, I don't know what you can be bullish on. And then also stocks, 110 trillion going up with liquidity, with people having to invest. People basically have to invest into something, some of these things, to preserve the debasement of this. So you see here 120 trillion in cash. If you compare it, like there's more in cash than in any of the other assets. And even if you combine stocks and Bitcoin and gold, then you are beyond what people have in cash. So what they have in cash gets printed away every day, and people feel it more and more because they have actually printed too much. Now people feel it. They see that things are going up, like eggs, butter, I don't know what, coffee, but also cars, houses, everything is running away from them. So they know they have to do something with this cash to run with it. And the first logical option for most people is stocks, because it's easier for them to understand that if a company does well, probably their stock is going to rise. And also, it's everywhere on the news, and everyone, like their neighbors and their little degenerate cousin, they're doing it. Like they're in stocks. Everyone is in stocks, right? But then they will realize at some point that when stocks run, like you get an average of 8% out of the S&P 500, maybe 10%. over the years. And it's not enough, because they calculate like when they are going to be rich is like in 275 years. So they don't want to wait until they're in a coma to then someone else drive the Lamborghini, right? So they realize it has to be quicker. So then there is all the preppers and the end time catastrophic whatever, like the people, they are betting on gold because they think that after World War III has basically happened, they are going to buy things with gold. So they're prepping for their survival, and then they're basically buying gold to be able to act in a world that is completely destroyed. But that's not the bet that I'm going to take, because the chance is too high that World War III is not happening in the way they are thinking it is, that actually the internet and everything else is around. And also it will be very difficult to carry all this gold with you, together with all the cans of food and water and so on, right? Because very likely in a war like this, where everything is destroyed, you're not the only one where your house is still intact and so on. So this bet is also not very logical, right? So this has to go somewhere. So either you buy art and you hope that you bought the correct artist and there will be a demand for art, or you at some point discover there is an asset that has a compound annual growth between 40 and 50% every year, which makes the math very quickly something that, oh, I don't have to wait 200 years to drive a Lamborghini. So they're like, okay, let's buy something of this. And then they see it go up by 200% in a couple of years, and that's like, oh, let's buy more. And then they start understanding that it's the only asset that is finite. I mean, Picasso is also finite, right? But it's not as liquid as this asset. So they will start figuring out that Bitcoin is finite, where gold, if it goes up in price, the mining companies, they see it as valuable again to mine more. So they are mining more gold. And then they discover in whatever mountain or in an asteroid or wherever, they discover more gold, right? Whereas with Bitcoin, it's very clear how much is going to be mined over the next 100 years. And then it's finite and it's easily transferable. No one can take it from you. The government can take it from you. Border control can't take it from you. And you can basically send it and trade it, and you don't have to look at opening hours. Anyways, like this is all the big case. But if you look at these market caps here, then you basically have like the housing market, for example, 330 trillion, and then there's global debt. And this is another interesting part, because basically people hold a share of getting money back from all of these indebted governments through bonds. And some of these bonds are 2 years, some are 3, 5 years, some are 10 years, right? But people will quickly do the math and figure out that if it's not good to hold a share of the debt of these governments when they are coming closer to a point where they could technically file for bankruptcy, or are forced into bankruptcy because of currency collapse. I mean, we have seen it in Argentina, we have seen it in Venezuela, we have seen it in Turkey, at least that the financial conditions are out of control and are harder to control. So people will have to move also these 315 trillion somewhere into this, right? So they will, first of all, if they sell it on the market, they will convert it into cash. But then they see cash also gets debased, so they will convert it into these. So all of this is probably, along the next 20, 30 years, is flowing into these here. And there will be always a market for art. So I'm not expecting that the 18 trillions are going to flow out of art into Bitcoin, right? Maybe some, but most of it is like cash, debt, and some of the real estate is probably going to flow into these other assets, as long as they're outperforming or giving you some sense of security, or are somehow turning into a better performance than your cash plus inflation. Anyways, this happened to become a longer video than I expected, but let me know in the comments below what you think about all of this, and stay tuned for more videos like this, market updates, smash up the like button, and there will be more live streams. So really stay tuned with notifications on, and wherever you are on the world, have a great morning, evening, day, night, or afternoon. I see you in the next video.